All right, old Cappy had to do a little bit of research for this one. Brush off the old rust because it's been years since I've ever, done anything with financial markets. Like I don't know, I save for retirement and all, but trading and then reverse curve yields and all this other stuff. So we have a couple economic questions. Here's a couple questions that might tap into your economics background. You have to Google these or look them up on Wikipedia beyond a brief review. Then probably I'd prefer to just Google them myself. Thanks. I could probably figure this stuff out. I'm just feeling tired now. I want all the answers in a single video that I can digest once. I make 200,000. Also want to make clear I'm not some moron who's going out and buying a bunch of stocks based on advice. Market cap to GDP ratio is currently at 1.7. So let's explain this for the audience first. All right, market cap means market capitalization. That means if you took the total sum value of all the stocks being traded in the stock market right now, how much is that? And I should be able to suss this out. GDP is about 20, so 1.7, that's $35 trillion. We did the math, rough math, right? And the idea of comparing your market cap to GDP is all the goods and services we produce in a nation in 1 year. That's all of our economic production. So what they're trying to do is compare price to value. Like you are going to compare, how many dollars per pound, how many dollars per ounces for food, how many dollars per gallon of gas, high grade, mid grade, low grade. And that's all we're trying to do is what is the price of the stock market compared to the total economic production of the economy? Because all profits are going to derive from the economic production of the economy, right? That's not what the stock, that's not what corporations are entitled to, GDP. They're not owed GDP, right? It's the profits that are coming off of GDP. Interestingly enough, every bit of sale is a penny of profit for another company. So you could argue that in some economic ethereal sense. The larger point is we're comparing what are we valuing our total economic productive capacity of our economy at through the stock market versus what our economy is actually producing. And the lower this ratio, that means prices are lower per unit of economic production. And the higher it is, it means it's more expensive. It's very much like a PE ratio, but on a national scale. Now, I bet you if you compare that market cap to GDP, you'd see a similar correlation between the S&P 500 PE ratio, price to dividend yield ratio, which is the inverse. But continuing on. After last week's GDP report, where GDP fell 33% annualized, not in one quarter, annualized. It's really at an all-time high, meaning it's overvalued. Because what's happened, again, just giving everyone the basics here. The stock market had that little dip where everyone panicked, and I bought. And then it recovered in a month, like I think 2 weeks. Because we printed off the Trump books. Who dang? And everyone's like, fine, everything is awesome. So the stock market recovered almost immediately. But then our GDP tanked. So now the ratio is very high. As you know, this is Warren Buffett's favorite indicator for if the market is overvalued, which it is, of course, certainly is. Do you agree with Buffett on this or not? Do you agree with some of the critiques that that have emerged since Fed action? Here's the thing with Buffett, and he's not wrong. I would disagree with Buffett, which, by the way, has a much better track record than me, and how we are treating this philosophically, theoretically, and especially into the future. Buffett is a value investor. He's a fundamental investor. There's a technical analysis, a fundamental analysis. And a fundamental analysis, it's just a fancy word for like, am I getting my bang for my buck? You're looking for value. And that makes obvious perfect sense because you're comparing the total market price of stocks as a whole compared to the total economic production of the economy. And he's 100% right. Now, again, I prefer the S&P 500 PE ratio. I prefer over that the dividend yield because that's actually the only money you get. But yes, it's always been what do you pay for what you're going to get? Now, if you want to be a fundamental investor, which you kind of do, you go through all these things like looking at debt ratios, how stable is the company, growth, product satisfaction, common sense things. And you can waste years studying one stock. How deep do you want to get into that stock? And that's what Buffett does with his Berkshire Hathaway mutual fund. And he's proven his track record has been amazing. He's blown the market out of the water very regularly and consistently. But as of recent, and by recent, I mean the past 20 years, certainly the past 15, he's lost a couple times to the market. The frequency of him losing to the market has increased. Now, has Buffett changed his technique or strategy? No, he hasn't. But what has happened is that, to be perfectly honest, we've just printed off money to get ourselves out of our own mistakes. That's it. And back in the day, now, this isn't back in the day, not too long ago, an economist came out with a study that showed what the stock market had been driven by. And from whatever, the 1880s to about the 1970s, it was driven by earnings growth. Then from the 70s to the 90s, late 90s, early aughts, it was driven by, was it not debt? It's something else. And then since 2000, basically, it's just how much money did we print off? Oh, and by the way, how much money did we lend out? How much credit was in the market? How much money was in the market? And what it showed is that the market was no longer being driven. It was called delinked or decoupled from the underlying thing that should be driving stock prices, which is profits. It is now just how much money do we flood the economy with? So it's a supply-driven price, not a profits-driven price, the supply of money. Tuition is the same thing. Why is tuition so high? Did your buddy Barry you voted for quadruple the money supply? He did? Gee, I wonder why housing is quadrupled and rent has quadrupled and tuition has quadrupled. But hey, you know that free shit is free because the nice mixed-race black man said so, right? I'm sorry, you couldn't hear what I'm saying because you had Obama's dick in one ear and Barry's in the other and you're just jerking them both off at the same time. Damn, why is rent so high? I'm a college graduate. Anyway, where was I going? So it's money. How much money do we print? And now, to be intellectually honest, Trump's printing off more money too. I wonder if tuition and cars and housing and rent and healthcare costs are going to go up. I wonder. But you see, Aaron, a gallon of milk didn't go up. There's no inflation. Why is rent $2,000 a month for one bedroom? Those damn Republicans and white people. I are smart. I have a liberal arts degree. So I think where I would quote disagree with Buffett is that his outlook or his investment philosophy is outdated or has failed to account for how much money we, Jay Brian, how much money we printing off today? Same amount of money we print off every day, Pinky. Trillions and trillions of dollars. And it's this credit expansion, meaning how many more loans do we make? Because loans are effectively money. Or if you want to be more basic about it, the monetary base, how much more money did we print off? I'm finding that's a better indicator of what prices are going to be, i.e. the future. And sure, you'll have crashes, just like we had the housing market crash. Oh my God, we tripled the money supply and housing prices recovered. Oh my God, who saw that coming? Oh, this economist did. Right over here. Hey, when do I get my Nobel Prize? They give you, Aaron Clary, the prize of fuck off because you didn't advocate more socialism. My prize of fuck off because you didn't advocate more socialism. I hang it up in my back. So he's 100% right. Yeah, if you want to look at prices, but I think fundamental analysis is outdated now. It's obsolete. It's just how much money you think is going to be printed in the future, and that's what's going to drive the stock market. That's what's going to drive asset prices. I agree with some of the critiques of this that have emerged since recent Fed action. I don't know what critiques have critiqued him, but that's my critique. It's such a shame because Warren Buffett is right. We shouldn't be printing off trillions of dollars. The money supply should be stable. It should increase along with economic growth so prices are stable. And then you can analyze. You get back to what's called price discovery. Is this share of IBM truly worth $40 a share? Is this house really worth $400,000? Is rent really going to be $500 a month, or is it going to be $1,500 a month? Obama money, it's free. What? Why is rent high? So yeah, that's basically all I can really say about it. He's right. He's 100% right. The stock market's over. I used to be an advocate of this as well. And I thought when the boomers started pulling their money out, selling their houses and selling their stocks, we'd see a collapse in this. But the government just keeps printing off more money. And that money has got to go somewhere. And it usually ends up sitting in bank accounts in the form of marketable security or brokerage accounts of marketable securities and mortgages. Explain inverted yield curves for bonds and how this relates to the Buffett indicator. All right. The yield curve. What a yield curve is you have different bonds that mature at different points in time in the future. You have short-term bonds, or like, government treasuries. They got a 3-month treasury. You have a 1 year, you got a 2 year, you got a 10 year. I think Disney even came out with a 50-year bond. And the yield curve shows you the interest rate that is paid on those different bonds that are going to mature at different points of time in the future. And logically, as you would think, if I have a 10-year bond, I should have a higher interest rate because I can't cash in on it for 10 years. My money's tied up in that investment for 10 years. Whereas a 3-month T-bill or even a money market, something very short term, the interest rate would be lower than a 10-year or 25-year because it's only tied up for 3 months. Now, what happens every once in a while is the short-term economic outlook looks so bad that there is a risk that the short-term bonds won't get paid back. And so people are like, whoa, I'd rather move to a long-term bond. Oh, I'm worried about, I don't know, inflation, and that's going to eat away at the rate of return short-term. I'd rather invest in the long-term bond and avoid the risk or lessen my risk of dealing with an economic problem, a recession, a financial crisis, stuff like that. And then that inverts it. So yield curves normally go up with maturity. But then it can flatten or even go down where your short-term bonds, whether it's 3 months or a year or 2 years, are higher interest, because in order for you to get money from these people to lend you money for that short term, they're kind of like, there's stormy weather ahead. I want an extra percentage point or two. If not, I'll just go with the regular good old Colgate Palmolive. I'm trying to think of a stable company. I'll go with the good old fashioned. Used to be Heinz Ketchup. Ketchup used to be its own thing. Heinz used to be its own company. It was a very stable company because everybody buys ketchup. Recession. I'm going to go with an alcohol company. Alcohol and casinos. They always do well. I'm going to go with a 10-year bond with that stable. I'm not lending short-term to you guys. So interest rates are high, and then they go down, ironically, along with maturities. How it relates to the Buffett indicator? Well, today, the Buffett indicator, where GDP had tanked so much, that's the manifestation, the realization of a recession. Now, we have to have 2 quarters of consecutive economic contraction. Don't worry, we'll have it. It'll be a real recession. But I think we're already here. We're already at that recession. And so people are like, whoa, lenders, people who are going to lend their money to borrowers to invest in bonds. That's when you buy a bond, you're lending money to someone, and then they pay you back in interest. So lenders who have got all this money are like, whoa, bad financial times now. I'm not lending in this environment. I'm going to wait. Now, that's another thing, too, is people just don't want to lend in right now. There's a lot of money sitting on the sidelines, and now people got to pay a higher interest rate for short term to get this money to come off the sidelines and compensate for the extra risk during this recession. So short-term interest rates are higher. And I don't know if it relates to the Buffett indicator in any economic way. Like, one is not causal to the other. It's just a reflection of GDP growth. All right. So GDP growth tanked by a third annualized. They're like, oh, wow, I'm not investing in the bond markets short term. I'll wait till this storm passes. So interest rates are high. But the economic contraction decreases GDP, which decreases the denominator of the Buffett indicator. But stock prices had recovered, so that's still high. So now you have a very high Buffett indicator and an inverted yield curve. I'd be curious to see if the two correlate. I'd imagine there must be some correlation, but I used to do that back when I was an economist, and no one paid me enough back then. I'm certainly not paid enough to do it now. Not by you, sir. It's so funny. All I wanted to be was an economist when I grew up, and no one would hire me. And then towards the end of my career, I ended up becoming an actual economist and doing some real economic work. I was paid shit. And now I don't want to do it. Now I'm like, hey, what do you want to do? I'm like, all right, it's going to be a lot of money. Remember that time I predicted every fucking financial problem that ever fucking happened? None of you cocksuckers would pay me because, you didn't want to listen to me. How's Lehman Brothers now? Oh, that's right. Sucking dick behind the garbage bins for a living. Dick Fulda. It's really at an all-time high. Wait. Oh, here we are. I'm sorry. To imply a coming market crash. Well, see, the market crashes are because would be another interesting thing to look at is to look at the longevity, the length of these market crashes or even corrections. Not since the great crash in 2008. These have been little, they just blip, boom. It's a buying opportunity. It's a buying opportunity. So you could go ahead. The market crash may come for whatever little reason. But man, the recovery is super fast. So to predict or to imply is a better word. The Buffett indicator would imply a coming market crash. But it can also be affected by it. The GDP would well, and what do you mean by market? A stock market crash? Yes, if GDP is the one that is going down and stock prices stay high, that could indicate a stock market crash. But if you're talking the economic market, like the economy crashes, well, the economy already crashed. I think you mean a stock market crash. Yes, it can imply, all it can imply is overvaluation. It can imply that a crash or predict a crash because you don't know what spark is going to set off all that fuel. I don't know if you remember watching The Big Short, if you ever saw it. There was like a good 2-week time, maybe even a month-long time, where the data was starting to come in and show that these mortgages were not being paid back, and now they're starting to take losses, and people were still buying the fucking mortgage-backed securities. The market can remain irrational beyond what, same thing with .com. .coms didn't make a fucking dime. We're price to sales. You want to talk about the ultimate dude bro thing? Price to sales. If anyone says, we're trading at this multiple of sales, you find him, you find a boat, make sure it's very leaky, and then you have him paddle out to Japan with one oar. Say, bye. Hope you make it. If we do, we really hope you make it. Maybe send some sharks along with him. Or her, although his total dude bros are always doing that. And then the inverted yield curve. Yes, the inverted yield curve has traditionally, statistically preceded recessions. But that can also be kind of a self-fulfilling prophecy where everyone's a little bit worried. Investors are worried, so they're not investing. And so if they're not investing and they're not lending money and companies can't get money, well, now I guess they are going to have to shut down the factory. So this is why the Federal Reserve and central banks in general are like, well, let's keep the interest rates really low. It's pretty fucking low right now. How much lower would you like it to be? So it can, and it usually there's some serious concern on the part of investors and businesses where they're holding off on investments. They're holding off on lending. And then the yield curve inverts. So there's usually something actually wrong with the economy to scare investors away. But them being scared away does not help matters because that will actually show up in the data anyway, that there is a recession. Although this one, there is a recession. By the way, if you didn't know, we're in a recession. Yay, Democrat governors, keep us closed down. And yes, it is that simple. I was also reading somewhere else that the Fed may try to manipulate the curve somehow so it doesn't look inverted by doing some other bullshit. I don't feel like looking it up. What you're talking about there is called yield curve control. You can look it up. And it's part of FOMO. FOMO? Federal Open Market Operations. And the Federal Reserve, central banks have several ways to control interest rates and also inflation. Printing off more money. The reserve requirement ratio, how much money banks they require have on reserve, which I think is 0, by the way, now. And then Federal Open Market Operations. I remember it's called FOMO. FOMO. And what Federal Open Market Operations means is they either buy or sell treasuries And now more recently, you say, what's the balance sheet of the Federal Reserve look like? Well, now especially with the dot-com bubble, they went out and bought mortgage-backed securities. Normally, central banks just dealt with government securities, government bonds, sometimes foreign government bonds as well, foreign currencies, gold and silver, very, very liquid. But to basically bail out the economy, the Federal Reserve, literally like Jesus Christ, took on the sins of the banking industry and bought all their shit mortgages, and then actually ended up making money, I think, on it as housing prices went up. They were kicking around doing that with something equally stupid, like a completely worthless. And you thought these mortgages with these, jumbo loans and the house, you thought those investments were worthless. You want to talk about a worthless investment that the Federal Reserve might end up bailing people out and buying those? It's called student loans. Really worthless investments. So I just feel with my $200,000 student loan debt from Middlebury that everyone should pay for me because I'm really intelligent. I have a master's degree in poetry, and it's been my passion. I keep going on tangents. Where'd I go? Fed admitted, so federal open market. So what it will do, this is how we don't have a free economy anymore. The Federal Reserve will go to the extent to print off money to go buy different maturities of bonds to reflatten the curve or to recurve the curve. So you have an inverted curve or a flat curve. And they're worried that this might, oh my God, inverse yield curve. Oh my God, heaven, fetch me the vapors. Run, everybody, run. The economy is falling. Nobody save money or spend less than you make or major in the right shit or don't have kids you can't have. But no, run, panic. Federal government print off money to save us. And what they'll do is they will artificially make the yield curve normally again. So they'll go out and they'll, I got to remember how this works. You buy up. And then so you would buy up. If you buy it up, the demand for the yield goes up. Well, another thing the Federal Reserve can do to affect the yield curve is you can also lower short-term interest rates, of which other bonds are based off of. So you can do that. Because bonds are inverse to the yield. This is one I always had to sit and think through again. They would go out and buy longer-term securities, longer maturity securities to boost their rates of return up so that, let's say, the 30 or the 3-month bond, the 3-month bill or the 3-month short-term lending security out there for it could be the government, it could be a company, is at 2.5%, and the 1 and 2 year bonds are at 2%. All right, so that's inverted. It's going down. What the federal government the Federal Reserve will do is it'll print off money and then it'll go buy 1 year, 2 years, 6 months, and then make basically plastic surgery the yield curve to make it look normal again. And then the fucking idiots on Wall Street, duh, it's okay now. Everything good. There might be some underlying economic reason for that. I don't know. But it wouldn't surprise me, given how stupid economists are and financial geniuses are, they would do something as stupid as plastic surgerying the yield curve. But yes, there's a term called yield curve control. It's just a wonderful euphemism. So there you go. How do leverage ETFs work? So this is completely different, like SPXL and the like. So they can go up 2 to 3 times at the rate of a regular ETF. All right. So let's ETFs are exchange traded funds, which invest in indexes or indices, rather, I should say, like the S&P 500 or the NASDAQ or whatever else. There's hundreds of them. And well, they're a variant of index fund. They're cheaper because what is it? The index you buy an index fund, you buy at the end of the day. ETFs trade real time, if I recall correctly. And I think they have even lower managerial costs. Man, you are making me stretch, go back way back to the days when I used to do seminars on investing. And then inverse. Okay, we'll get the inverse. All right. So a leverage ETF, they do it one of two ways or a combination of both. Some company will offer a leveraged index fund or leverage ETF. And for every dollar in capital they get from you, or they may throw in their own money too, they will either go and borrow money directly from a bank or an investment bank to go buy, 2 to 3 times the amount of shares in the S&P 500 index or whatever security is that you're trying to get 2 to 3 times. So they can do it directly like that. Or I guess more easily, they can use options and derivatives where they don't have to go and borrow that much money, but the exposure is that much more because the options and the derivatives allow them to buy 2 to 3 times more. And so if there's anyone that's going to cash in on their leverage ETFs, they got the option, they can execute that option, get themselves 2 to 3 times the amount of stock sales for that, for a little bit of extra cost that comes in buying and purchasing derivatives, options, warrants, things like that. I don't know how bored you want to get at. The point is, they either borrow the money and go buy 2 or 3 times the amount, or through the use of options, you can get exposure to. You have the right to buy 2 to 3 times the amount without having to go and borrow that money. But the problem with options is because the value of your option is greatly volatile relative to the index. If your options go in the red, the company that sold you those options may want to say, hey, you couldn't give us the extra money. So, but that's how they use financial instruments. They just borrow the money. And that's how they get 2 to 3 times the exposure. But you're investing in that company as a whole, including the underlying machinations through leverage or financial instruments that they go and get 2 to 3 times leverage. And that's how they can get 2 to 3 times leverage. Short selling, whether it's an ETF leveraged or not, this requires a little bit of reverse thinking. Let's say you think the price of something is going to go down and therefore you want to short it. And you say, well, how do I make money on something that's going down? Well, what you do, let's say it's a share of IBM. You got some good information that you think IBM is going to go down. It's $100 a share. So what you do is you go to a brokerage. Now, brokerages just don't have money. They have other people's shares, their 401ks, their IRAs, their mutual funds. Those all are ultimately composed of stocks and bonds, other financial securities. And so they have an inventory of somebody else's IBM shares. You say, I want to short some IBM. And they say, okay, we're not going to sell you a share. What we'll do is we will lend you a share of IBM, or 100 shares, however many shares you want. Let's just say 1. You want to practice shorting. We'll give you 1 share of Bob. Bob, we're going to take a share of IBM out of Bob's 401k account. We're going to give it to you, Joe Schmo. You, Joe Schmo, immediately go to the market and sell IBM at $100 a share. Now, of course, you're not doing this. This is all done through a brokerage. Your brokerage will go sell the share for you immediately like that. Could be even the same broker who pulls it from Frank's 401k and immediately turns around and sells it for you. Now you have a short account. And so now you have $100 in your account. Okay. And the way this works, the accounting works like this. You don't owe Frank $100 because you didn't borrow $100 from Frank. You owe Frank a share of IBM. Okay. That's what you owe Frank. But Frank doesn't even know you've borrowed it because no one pays attention to 401ks. And that's how people deal with this. So you got to remember, you don't owe $100. You owe the brokerage that owns the 401k plan for Frank 1 share of IBM. So if you're right and the share of IBM goes down to 50, well, you take that $100 that's in your account, you buy a share of IBM at 50. You don't even take the $100. You take the 50. You take 50. You only take $50 of the $100. You buy a share of IBM. Yeah, here you go, Frank. There's your share of IBM. And now you're left with $50 in your account. And that's shorting. The problem is where you get a margin call, is let's say you're wrong and a share of IBM goes up to 150. And unless you got enough money in your account with the broker's going to call you up and say, hey, you owe Frank a share of IBM. And IBM just went up to 150. All right. I see you only got $100 in your account. We like you to be within 80% of that. So they're going to say you need to throw in another $40 to make sure you're not falling too far behind Frank. And so then that's when a margin call is. You got to throw in your money there. Make sure your balance is close enough to what you owe Frank in terms of market value. And so with a leverage ETF or any other security, that's what you do. You would borrow it from somebody, immediately turn around and sell it, hold on to the money, hope the value of that stock goes down, buy it at a lower price, return the share of whatever it is that you borrowed, and the residual money is what you made on your short sale. So there you go. Everybody excited? Was that sexy and exciting? See how much Cappy knew when he was a young man? Adriano Ramos, who hey, that was some pretty cool pictures there. Have you ever eaten calamari? No, I saw your pictures though. I have had calamari. I take it back. I have. That's some crazy fish you're getting out there in Perth, man. I think Adriano is Greek. I thought he was Latino for something. Like, what's a Latino doing all the way down in Perth? He's Greek. Nonstop Dre, $2. Money printer goes burr. Yes, Stray. All you have to know to be a good economist today, to get your doctorate, say money printer go burr, and say there is no inflation, and say modern monetary theory. We can just print off all the money in the world. Why is rent so high? The amount of shit that I could explain, seriously, the amount of shit that I could have explained 20 years ago, the amount of poverty I could have prevented. It's not that hard. And that's the thing. It's not that fucking hard. But not you guys, but you fucking people are so stupid and fucking lazy. Okay, fine. Money printer go burr. You can't even invest. All you do is you own shares of stocks and property to hedge against inflation. I love how the millennials bitch and whine about the boomers whose housing prices have gone up. I'm like, well, did you vote for more money? Where'd you think the money was going to go? Styrofoam prices? I can't afford a house. And what's great is now the boomers are downsizing. Is so amazing. So the boomers are selling these huge McMansions, of which nobody wants to buy. And then they're buying these like starter homes in the city where it's getting all gentrified, pushing out the millennials. And now they can't even afford like a 3-bedroom, 2-bathroom starter home. Oh, Eric Wasson for $5. When you get tailgated, do you break check or ignore it? Sometimes this pisses me off at the same level as kids you can't afford. If I'm getting tailgated, no. Because now there was one time a lady was doing her makeup and I had my really shitty car. I just hit the brakes and I saw my rearview mirror, her makeup and everything go flying. It was fucking hilarious. It was during rush hour. I was pissed and I used to be, yeah. I'm surprised I didn't get in a road rage accident, but just man, here's a perfect example, Eric. They want to go fast. Let them go fast. Cop will get them. One of these, maybe not today, maybe not tomorrow, but if they're speeding, they will get a ticket. All right. And you want like fuck with them, just get ahead of the next car, move into the next lane, let them fly by. Just let them. It's not worth it. It's not worth your car getting cracked up. You got to go with insurance. Now there's maybe a lawsuit. Now even some criminal charges or traffic violations. Let the world punish the stupid. These kids, they're racing their riced up Subarus and what was it, a Honda? And I won't lie, I like the cold air intake sound. I like how it goes. Brap. It's pretty cool. I'll admit that. It used to be more common back in the 90s and the early aughts. But I saw these kids just racing by. One was a Honda, one was a Subaru, had the fins and everything. And I'm just, and I heard them. You can hear them before you see them. I'm like, okay, I'm going to get over. And then they zip by. They're going to hit a kid. They're going to hit someone's dog. They're going to crash. At least then they're going to get a cop. A cop will get them. Don't let the world do your punishing. Don't you do the punishing. You're not the punisher. Your sister's going to major in stupid liberal arts shit. Hey, little sister, don't major in stupid liberal arts. Shut up, you sexist, homophobic, racist motherfucker. How you doing? Okay. You know what? I take it back. Just do me one favor, sis. Make sure you get yourself a doctorate in English, because otherwise I won't take you seriously until you get a doctorate. I don't even, matter of fact, I don't think you can get a doctorate. I don't think you're smart enough. Bet you can't swim with this cinder block holding up in your hands. Bet you can't tread water. Yeah, show me. Here's your cinder block. Give everyone a cinder block while they're trying to tread water. Chris Smith, are you wearing pajamas? Yes. Yes, I am. These are my pajamas. Look at it. It's 11 o'clock. Maybe I'll get off it. Eric Wasson again for $5. Economic collapse soon. New World Order is real. 95% extermination rate by 2030. Watch your Agenda 2030 video. No, I don't think we're going to. Who's going to produce the shit? Who's going to produce the stuff? And not economic collapse, but boy, this sure is a nice, fun recession we're having, isn't it? I can only say that because for once, this is like the first recession since I had the Volcker, I had the 1991, I had the dot-com, and had the financial crisis. So out of 5 recessions now, the fifth is a charm where I'm like, I'm not affected by it. Everything else just got destroyed. What do you mean, hand me down, kid? Hand me down, clothes from my uncle. This was in fashion in 1972. Why am I getting the shit kicked out of me in school? I didn't choose plaid or brown. Eric Wass said, geez, what's up, Eric? For $5 again. When, if you watched The Big Short, were you confused as to what a synthesized CDO was? No. Collateral debt obligation. Well, maybe I should look it up, but they had different names for this. It's an MBS, mortgage-backed security, ABS, asset-backed security, collateralized debt obligation. That's just a mortgage. Collateralized, there's collateral, debt obligation, that's a mortgage. Look, finance people are dumb, but they have incredibly small penises and they have huge egos. So they got to make it seem like they're smarter than they are. So they come up with acronyms. Collateralized debt obligation. That means an obligation, a mortgage, that's debt, has been collateral. There's collateral underneath. Synthesized, I don't know. I'm assuming they just pulled them together and formed a mutual fund out of them. So you had a bunch of mortgages, you put them together, and then they sold it on the market. And there was some legit reasons to do that. Like, let's say you are a bank or regional bank and you just made loans, you just made mortgages to the Atlanta, Georgia area. All right. Well, if you're just in the Atlanta, Georgia area, you are susceptible to localized economic factors that could torch it. Like, let's say that you lent agricultural lending in Georgia. All right. What if a frost comes in? So to diversify, what banks essentially did is they trade and swap out different types of debt. I said, well, we're a little heavily exposed in manufacturing. Let's get some agriculture. Well, we're a little heavily exposed in agriculture. Let's get some residential. Well, we're a little heavy in that. Let's get some commercial. And you can swap out, and you can also do what's called participating in loans. Like, oh, let's participate in this loan over here in this state. Let's participate in that loan. And a good not loan officer, but portfolio manager at a bank would keep tabs on that. Like, kind of make sure you had a diversified pot. We got too many car loans. You'd sell some of your car loans. But another way to do this is instead you just go buy a collateralized debt obligation or asset-backed security or mortgage-backed security, which should in theory have a diverse portfolio of different mortgages or assets in the portfolio. And then you'd mitigate your risk. But when all those loans were made to a bunch of douchebag millennial and boomer fucks who thought, I'm going to have my $400,000 McMansion and I'm a waiter. Ha ha. And bankers are like I remember they were doing a 105% loan to value where you'd lend more money than what the house was worth. Because, well, it does go up in value. So that's what I'm sure there's maybe a specific unique need. But when you come up with fancy words like this, it translates into this. I'm a finance guy with a small penis and I have to sound more intelligent than I am, dude, bro. Nonstop Dre, $2. What will the inflation rate be after the COVID? I don't know if you know that, Dre. You can make billions of dollars off of it. And are we talking inflation to include housing prices and stock market prices and tuition prices and healthcare prices? Or are we just going to look at the CPI, which is a gallon of gas, a gallon of milk, and the thing of bread? Oh, let me scroll back. But Nonstop Dre, $5. What do you think would happen if the U.S. tried to go back to the gold standard this year? Oh, God, no. Gold is not liquid enough. There's not enough gold. It's not divisible. No, we can't. No. Even if we had paper. No, there's not enough gold to keep up with the production of the economy. If we were to go to any kind of consistent standard, you just can't inflate it away. We would have to tax the ever-living shit out of the American people, because right now we just print it off. And then in a weird sense, everyone's happy because stock prices are up. My house price is up. And then, but when they end up paying, well, how it ends up inevitably being paid is people pay more for tuition, more for healthcare. And wherever the money is lent and drives up the prices of these things, that's how you pay. Rent, you pay more for rent. Remember those millennials thought they'd get free shit? I cannot harp on this enough. Remember those millennials who thought they were going to get free shit from Barack Obama because the pretty black man said so? All right. They're giving it back now. They're paying it back to property owners in the form of higher rents. Now, these property owners had to go and pay higher prices because that's where the money went. They had to, and so their mortgage is higher, their expenses are higher, but they got to charge higher rents for that. It's like, okay, you voted for this. But with a gold standard, you can't put off more money because you can't just create more gold. You'd have to force those taxes on people. So in an ironic sense, printing off more money actually helps. It doesn't help out anyone. It doesn't help anyone. It hurts poor people the most because they don't own the assets and the prices. Also, may I introduce a concept, something else millennials and poor people can't afford, is retirement savings. You don't see it because companies keep splitting their stock. And this gets back to what the client brought about with the, I say price to earnings ratio. He talks about the Buffett indicator. Is if you think about it, retirement savings should be a significant monthly expense on your personal budget. You should be throwing away, depending on how old you are, but around $400 to $500 a month into retirement, right? But if the number of stocks you can buy with that is so low because stock prices are so high, this puts retirement also out of reach for most people. So not only is home ownership or affordable housing out of the reach for most people, especially the poor, so is retirement planning. But I got the free money. Think about this is how leftists fuck them. Guys want to feel good about yourself, want to feel good. All these little Marxist, parasitic, Gen Z now too, and millennial fucks who thought they were going to party and have the college experience, and I'm just not going to pay for it. You know, I want to be bailed out, and you people go ahead and pay for it. All that money. Okay, so they didn't get an employable degree. They're completely fucked when it comes to finding employment and making a good wage. But all the prices have just been driven up in the past decade because now they got to pay more rent. Now, yes, you have to go through the problem of buying a house, being a landowner, renting it out to get that money back. But they just fucked themselves over. They didn't get free nothing. You never get free nothing. You will always pay. You will always pay. And so a gold standard or any hardcore currency, like we're not printing off any more money, you know, just, I don't know, principles and ethics, would have put an end to that, saying, okay, you guys want free college education. I guess sales, and Cappy's, I guess sales tax is going up 10%. You're all 10% poor now. What? Oh my God. But when I said I want to be a virtue singing leftist Democrat that said everything should be for free, I didn't mean I'd pay for it. I mean, you'd pay for that person's shit and mine. That's why I'm caring, and not just the ultimate parasite hypocrite. So what would happen? There'd be a really, really, really big recession as we reset, and we'd have to reset our financial system. I'd say we go crypto. Before we do that, that'd be a lot easier. People have to get used to the new payments. Gold mining stocks would certainly go up. And then we'd have to have a balanced budget amendment because you just can't print off more money. What would happen though over time is the US dollar would definitely skyrocket again. I mean, we would certainly shore up and maybe we could print off dollar notes against which is fractional reserve banking because we'd have some gold backing us up, which would make us, that would certainly cement our position as the world reserve currency. So we would have the opportunity to print off notes of fractional reserve banking where we only have, we print off $1,000 versus $1 of gold that's actually in the vault. And the Chinese and everybody would eat it up because they ain't got no gold. Russia, I don't think so. I think Russia's actually got some gold. It would suck. Josh Landrum, $2. People tailgate me on my motorcycle. Fuck dick. Fucking damn. Yep. Just tap the gas. Get away from them. Just get away from them. Phil for $2. AI is going to automate accounting very soon. Yep. Already has. Called TurboTax. Called QuickBooks. Carl K for $5. Carl, I think Carl is the new guy. If you had 1.4 million in equities, 134,000 in cash, or a total of 1.53 million, 51-year-old retired to Southeast Asia, feels like it'd be a one-way trip. Boredom an issue as well. You gotta do global reconnaissance. That's my next step, Carl. That's my next step. And I don't think people who tune into the show can sit in one place. Like, you need to, like, look at Matt Forney, whatever your criticisms of the guy might be, or look at Roosh. They can't sit still in one place. What you're really looking for is an apartment or a place just to, where the banks aren't going to fuck you over. They're not going to hand your money over to the federal government when President Cortez comes in and says, all those people that expatriate, well, yeah, I passed a law. And then they strong arm these countries to give the money back. You're going to have to travel around. You're going to have to find a place where there's good banking, reliable banking. They'll tell the U.S. government to fuck off. No, it's not your money. They already paid taxes on it, and you're not entitled to this. But yeah, you got to go to Southeast Asia and figure out what you want to do down there, whether you like it. I'm just picturing or imagining, and this is, dare I be hopeful. I have a feeling I'm going to be somewhere in Central Europe or Southeast Asia. Probably Southeast Asia. Why? Because it's warm. That's just the real main reason why. I'm sure Bulgaria, Romania, Poland is all very nice. I'm sure the people are very nice. Yeah, but there's snow there. Cappy, don't do so. Although I could just buy a cheap place and leave for winter. But what's great is being either in Central Europe or Southeast Asia, that's all connected. And so I'm thinking, like, the motorcycle riding opportunities are amazing. I have to be a big arc around the Middle East, go up into Russia, and the roads are shit in Russia, I hear. But you're going to have to do your reconnaissance, man, and report back. I got to talk to Better Bachelor and find out what he recommends. Because he's traveled 144 countries. So he certainly has some insights. But once I get done with asshole consulting, and then I can finish my seminar, and then I can upload my shit, and maybe I get back to my house built, and maybe I can fucking go on global reconnaissance. Eric Wasson, $5. Synthesized in the movie meant MJ made 10 baskets. He's going to make the 11th basket. Then he misses. Lots of people bet on him making it, and he didn't. I'd have to look at it again. M2PG4, $5. A buddy of mine is 32 and still lives with his parents because he's saving and investing a lot. Pays rent to them, but way cheaper. Yay or near care? Yeah, I have changed. As society has changed, my opinion on this has changed. When I was a very young man, I prided myself on moving out of the home at 18, never going back. And I saw a lot of Gen Xers like, I'm independent, and mom and dad were paying for rent, or they still live. Shut the fuck up, you are. Get your ass back to Edina. But as tuition prices have gone up, and more important, and rent has gone up too, so there's certainly that. But more importantly, since women, the younger people who are more prone to live at home, and younger women have just no interest in marriage or men, and if it is, it's short-term flings. And their career is almighty and uber alles. And dating now has gone online. Like, you're not going out to the nightclub and you might get lucky. You got to bring a girl back. The dynamics of that has changed, that you really don't need to go live on your own. Is there a reason to be a masculine man or an independent woman and go out on your own and live on your own? Yes. But that's more of like, can I do it? Do I want to be on, sure. Have that experience, get used to it. Don't be the guy that lives at home until you're 30. But I can't blame this guy either, especially for those of you who live in like Silicon Valley or Southern California in general. I don't know if you got a choice but to live at home. Because again, Democrats just know everything and how to run a society. I mean, that's why you have affordable housing in the Democrat places, right? And there's no traffic and everything's wonderful and there's no pollution, right? Fucking morons. Yeah, but with prices being what they are, especially now with the Great Recession, another Great Recession going on, and the ladies just like, no, they're not interested in dating, or it's way cheaper to just get a hotel. So by all means, still go out, but when you go out, guys, you should have like $200 in your pocket to go and pay for a room, or you go back to her place ideally. But since you got to meet online, because that would happen. You mean you had to have your own place, even if it was just a room, as long as your parents weren't there. Yeah, because it would happen. Cappy would go out to be a girl. We'd come back to my place. Thank God I had a place. But God almighty, $1,000 a month. You could save $500 a month. Yeah, you're going to come out ahead just paying for a hotel. How often do you get laid? Really, how often? I mean, good times, those 3 different girls a year. I was on fire at sometimes. That's pretty good, 3 different girls a year. But even then, okay, what is that? $600 for a really hot, nice hotel room at last minute? $600. All right. You're still coming out ahead saving on rent. Holy shit. Did all the super chats just come in? Fred Freeman Sawwell, very charitable gentleman, for $5. How can I best say, haha, fuck you to my liberal friends who want to defund the Chicago police after buying condo and I'll see the property value decline? How best can you say? You can't. You cannot. Where's my buddy? Here's my buddy, the Chapstick. Here's my buddy, the Chapstick. He's a much better conversationalist than any Democrat or leftist you're going to run into. Your liberal. I'm surprised you have liberal friends, frankly. I don't know how you can talk to people that are just that intellectually void or flawed. But you will have as much effort convincing this piece of ballistics to have shame for not having menthol in it. You're going to have just as much of an effect talking to the little chapstick about Austrian economics and converting it from a piece of chapstick to a human being that believes in Austrian economics, as you are going to get your liberal friends to, understand, haha, fuck you. About the only thing that we had a similar question with a guy, his sister was pretty much becoming a man-hater. I mean, a real man-hater. And he wanted to prevent her from majoring in the wrong thing. And he was a caring older brother, and she's like, we need to throw men in cages. And I said, all you can do is really predict now and record it. So what maybe you can do is you record and say, I just wanted to, have a conversation, just want to make sure if the police get defunded and your property values go down or there's a little bit of crime. Because here's the other thing. The way they're going to weasel out of that is we're going to print off more money, and then the price is going to go up, but not necessarily the value. So you'd have to make an argument like, okay, but relative to the CPI, it's really just housing inflation, the value of your house, but they're not going to listen to us. So I wouldn't even bother with it. I wouldn't even bother with it. I mean, it really isn't until someone gets killed. And even then, look up Amy Beale. Amy Beale, this goes back to the 90s. She was going to save Africa. She was the white girl that was going to save Africa. And she went out there and got killed. And then the family, her parents went out there, instead of torching that fucking village, they forgave the village because they love their politics and themselves more than their dog. That's how strong their faith is. They could have someone fucking die. Some people could have their own kids die down in the streets of Chicago because there's no police. Say, oh, look at that. Ha ha. You could do the Nelson. They won't put it together. They won't. So there's no way. DJ Aftershock, $2. Dude, man, it's the Bilderberg Group, one world government. Yeah, it is. Yep, it's the Illuminati. It's the dinosaurs underneath Denver International Airport. NK for $5. Do you think China's Belt and Road Initiative will work in the long run? Belton Road Initiative. Is that where they're like trying to run that superhighway out to Europe? Hang on. China's Belton. Here it is. Pulls up. Oh, this looks interesting. Maybe let's do a podcast about this. I'm wondering if this was, I did some on the Belton Road Initiative, more formerly known as the One Belt, One Road, for short, is a global infrastructure development strategy adopted by the Chinese government in 2013 to invest in nearly 70 countries and international organizations. It is considered a masterpiece of Chinese Communist Party Secretary General Xi Jinping's foreign policy. Xi Jinping originally announced a strategy during the official visit in India about for overland routes for road and rail transportation called the Silk Road Economic Belt, whereas road refers to sea routes of the 21st century maritime Silk Road. Incorporated, the Chinese government calls the initiative a bid to enhance regional connectivity, embrace a brighter future. Yes, I think I have heard about this. It was like this road they're going to build. China and Pakistan announced grandiose plans of military cooperation by the end of the year. Pakistan was in a deep financial crisis, but one thing became evident. China intends to use the Belt and Road Initiative for military purposes as well. I bet they do. Objectives. Construct unifies larger market and make full use of both international and domestic markets for cultural exchange and integration, enhance mutual understanding. God, just say you want to transport shit cheaply. God, oh fucking Mike. Just say we want to transport shit cheaply, and if there's a crisis, we can send our military down these roads. Capital inflows, talent pool, technology database, infrastructure gap, accelerate growth across Asia Pacific area, Africa, and Central Europe. Yeah, I did look into this. What was your question? Do you think China's Belt and Road Initiative will work in the long run? I mean, define it. It's going to work because you're going to have more traffic. You know, this is one thing I wish very closely related. One of the things the only thing that's prevented me from going and getting a bike and driving all the way from the Iberian Peninsula to Vladivostok, Russia, is the Russian road. The main road is a piece of shit. It's washed out. Ewan McGregor did a documentary going across it, and like he had millions of dollars. He had a camera crew, so they could fix the. So if Russia just had the interstate system, yeah, they look at the middle of nowhere, the United States. Towns sprout up along the interstates for any other reason to get gas and food. So it will work to some extent. But whether China did some kind of cost-benefit analysis, like, okay, what does it cost to get us a gallon of oil from the Mideast using this versus a highway, versus hauling it over land, versus hauling over freight? I don't know if it's done that. I frankly am very optimistic about this, because one of the greatest things I love about the U.S. Is its highway system, because I get the fuck wherever I want very quickly. You go to Europe, you can't do that. Like fucking roundabouts and everything's a spider and there's no grid, there's no latitude, no longitude. Fucking the Italian, Fabio, bibbity boppity boppity boopity in the left lane. I think it would work in the long run if they keep it up, if they maintain it well. Globally, I'm quite optimistic because that's been the trend. In the United States, I'm not. Eric Wasson, $5 again. How much for a picture with Cappy? Instead of Skype, do lunch with Cappy. Well, where do I got to go? Hey, if you haven't lived in the Twin Cities and I'm nearby, fine, $50. I'll swing on by. We can do crazy poses, funny hats, whatever. But like, yeah, if I got to go to Montana, that's going to be a couple grand. If I happen to be through town. Also, what is Operation Evil? Operation Evil is where I've given up trying to, here. This is Operation Good. Can we all agree? A book to help black men get out of poverty. Anyone get out of poverty is good. Operation Good is worthless, preventing people from getting stupid degrees. Operation Good is, hey, I know this is Bachelor Pad Economics, but it's for everybody. Everyone get their finances together. But when I put these books together, I get an amazing amount of flack and hatred, being called isms and all that, because I hurt people's feelings by telling them the truth. And then when I found out that, so I'm insulted and I make my little modicum of money, but that, and then when you look at what the pimps of lies make, be it the Democrat Party or Oprah or the media or women's magazines, like, holy shit, give me some of that do-re-mi. And what I got to tell? I just got to tell you, girls, that big is beautiful, and that 80 degrees is a good degree, and the flippity do with the flippity flop. And oh my God, here's my money. And all I got to do is just tell you what you want to hear. And not only will you give me more money, and more people will give me more money, you'll say I'm a great person on top of it for being your fucking drug dealer. All right. All these women that are about to die who have wasted their lives, all these boomer women and older Gen X women who are about to die and literally have wasted life because they followed what fucking Oprah said 40 years ago, should be pissed off and tearing down statues of Oprah. What do? They can't line up to lick her clit. Holy fucking shit. She's still, okay, fine. I'm not, we ain't going out like that. No, we ain't going out like that. I did first half of my life, first 2/3 of my life, giving Cappy life expectancy, trying to do it the right way. Fuck that shit. No. Oh no. And so Operation Evil is I have several products. I'm not even going to tell you what they are. And they're different types of products. Some are services. Some are actual physical products. And they are, like fentanyl is, I think, like 10,000 times more potent than heroin. Is that what it is? It came from Canada. It was created in a lab in Canada. I guess is what George Floyd had in his system, they're claiming, or whatever. It's like that. Oprah made heroin for women. I got the fentanyl. I got this powerful, addictive motherfucking shit. And women and men, you're going to pay. And it will fuck you up. And you're going to think I'm the greatest guy ever. And that's Operation Evil. Because I'm sick and tired of working hard. Couple more projects along the way. I got my seminar coming up on minimalism. I'll be perfectly honest. I don't think most of you guys need it. It's going to be $599. All right. If you're new and you don't want to go through all my shit, yes, then it's worth it because you're going to spend more than $600 unless you're like only making $5 an hour. The saving, this is just the lesson you need to have. I'm going to be trying to reach for other markets, different people, bring them into the world of family of Cappy. So I don't know if you guys necessarily need it. If you're having trouble with spending more than you make, losing weight, time management, all this other stuff, like that's important shit you need to get in control. Yes, absolutely worth it. But I have that project coming up. Hopefully that's uploaded by the end of the week. Hopefully that's available. But I keep burning out my throat on all these videos, which I appreciate. Thank you very much, gentlemen, and the handful of ladies. But that's it. Then I got another seminar that I got put together for Rule Zero seminar out in Vegas. And that again, that may or may not be happening depending on COVID and all that jazz. But that I'm going to convert to another product. So I'm going to put the effort into it. It takes a lot of research, but I'm going to convert that into another project. And then when I'm done with that, then I can begin Operation Evil. And I may need to take some time off because it's been a lot of fucking work. Gratefully, thankfully so. The irony, I'm more busy during this virus than any time in my, well, not any time in my past. But so that's Operation Evil. Operation Evil is just basically giving Americans what they want. Ruined lives with happy lies. Nonstop Dre 360, $2. You should call it Operation Oprah instead of Evil. No, fine, we could do that. No one's going to know it's me. No one's going to know it's me. I'm running through a completely different EIN number from a completely different person. It won't be traceable to me under was it anonymous LLC? You can't look it up. And it's just because there's so much potential for profit. I got to do this right. You won't know it's me. You won't. You'll maybe hear an advertisement for a product say, say, is that Cappy? Sounds like something Cappy would do. Or would it just be crazy leftist feminists telling women what they want to hear? You want to be so camouflaged. Oh, are we? Boop-a-doo, boop-a-doo. Was that Dre? Did I miss yours, Dre? No, that was yours, Dre. Fred Friedman Sowell for $5. They've been my friends since grade school before all learned politics and economics. He's an MD at a hospital. She's a PhD in psych at a place. Well, that's too bad for them. Look, they're already, They're already forking out half their money. If they're that good, they're forking out half their money, right? Do you think they pay attention? Do they have their CPA come in? And do you think if they're forking out half their money and they're still Democrats, anything could change their mind? Like, could you point out to them, look, at least half? Chicago's got what, 10% sales tax? I won't even bother being friends with. I can't deal with it. I can't deal with them anymore. We ain't going out like that. No, we ain't going out like. No, he hasn't yet. We just have the contingency because you never know what's going to happen. It's that's why I have all the money in escrow. I don't because I'm no dummy. That's it. Okay. That was Asshole Consulting question number 2. Questions, answers, assholeconsulting.com. Take a look at some of these books. We'll see you guys later. Toodles.